In today's video, I'm going to teach you how to record mortgage payments in QuickBooks Online. We'll walk through the full process from creating the transaction all the way to properly splitting out principal, interest, and escrow, so your books stay accurate and easy to understand. Let's start by creating the actual transaction. In QuickBooks Online, go to the top left and click the plus new button. From the menu that appears, you have two main options for recording this. You can choose check or you can choose journal entry. Most small business owners and property owners prefer using a check because it looks and feels more like a regular payment. A journal entry is typically used when an accountant is handling the books or when there isn't an actual check being cut, such as when a payment is done automatically and you're just adjusting the records. If you're using a check, begin by selecting the payee, which will be your mortgage lender. Then choose the bank account you're paying from and set the payment date to the date the mortgage payment actually goes out of your bank. This makes sure your bank register and your reports line up. Next, go to the Expenses tab at the bottom of the check window. This is where you'll add the different accounts that make up your mortgage payment. If you're using a journal entry instead, add a clear description such as mortgage payment, March, or whatever month you're recording. Set the date of the journal entry to the date of the payment as well. This description will make it much easier to recognize what the entry is for when you review your books later. Now you're ready to split the payment into its components. Take your mortgage statement and find the breakdown of the total payment, usually labeled as principal, interest, and escrow. Each of these needs to be on its own line in the transaction. For the mortgage principal portion, choose your mortgage loan liability account, often named something like long-term liability or loan payable. Enter the principal amount on that line. This reduces the balance of what you owe on the loan. For the interest portion, select your interest expense account and enter the interest amount there. This shows up as an expense on your profit and loss, reflecting the cost of borrowing. For the escrow portion, use an other current asset account set up for escrow. This represents money set aside for future property taxes or insurance, not an immediate expense. Once each line is entered with the correct account and amount, and the total matches your mortgage payment, click Save and Close to record the payment in QuickBooks Online.